Hello, this is a tradesight U.S. stock market and index analysis and economic data roadmap for the week, the shortened week of May 28th through May 31st, 2013. Charts brought to you by eSignal 11 as usual. Let's take a look at the S&P daily chart to start out with. We have had a pullback here starting midweek. One of the things we saw right after Bernanke's speech and testimony to Congress was a spike up in the market and then a complete meltdown the rest of the session. The next day we got a gap down and recovered a bit, and Friday, of course, was a little light because of the holiday that we have coming up here. We have Monday, no market trading at all because of Memorial Day here in the U.S. So Friday, after the rest of the week was very good on volume, seeing above 2 billion shares one day on Wednesday even for that blow-off top. We only trade 1.35 billion shares on Friday. So still definitely signs of some sort of reversal here in the market. And if I flip over here very quickly to the 60-minute data, I think you'll find something pretty interesting here on this chart. This is the 60-minute chart of the S&P. You can see the same blue trend line as it extends out. This will be the trend line we've been watching that goes back to November of last year that we're waiting to see if it will break and then retest and fail. But one of the things that's interesting about this move here this last week, this is basically a week and a half of data, almost 2 weeks of data here on the S&P in 60-minute bars. Notice that you get the 13 seeker sell signal late in the day on Tuesday, right before the spike up on the Bernanke speech, but we were basically in sell signal mode until he made his comments that were initially taken as positive. We were then rolled over. The risk line here, the pink risk line, is not considered broken because you spiked up through that level but never then traded above that bar's high. So the risk line essentially held, and that was the sell-off that occurred, and look how it took us right back to the static trend line of that move. So that's pretty interesting. I thought I'd point that out to everybody, what was really in place here before we got some sort of reversal. Now, let's take a look in the NASDAQ 100 side of things. Again, you'll see the same outside day up. Didn't quite get the 11th, 12th, or 13th bar for the sell signal. This one's got a lot of room to the downside. The benefit of having moved up finally in April and May after as flat as things were, look how horrible that March month is and January is just dead sideways. The benefit of this move up is that any pullback back down into this area now isn't that much of a pullback on the chart. It certainly doesn't put a lot of people's investing at risk. So there's no sign yet that even if we get a decent pullback here, it's going to be one of these market meltdowns. We can get a reasonable retracement without anything else going wrong. Let's take a look at the SOX index. This is the semiconductors daily chart right here. Again, you see that same pullback, and here's the biotechs as well. Now, as usual, we want to take a look at a couple of our key trading stocks on the daily charts to see what they look like during this week. Here's Google selling back off, and again, the prior week they had their I/O conference, and that causes usually the market to run up or the stock to run up into that and then reverse to the downside as kind of a buy the rumor, sell the news type of event. Here's Apple, which has basically done nothing right here, sitting near lows. Ignored all the action of the week, was actually practically up the day that the market was down. Amazon rolled over a little bit, still has that 13 sell signal in place from back in January, hasn't been able to breach that risk line. And Netflix, another one we trade a lot, not really showing any particular indicators either way. So this is all, I would say signs, obviously, because of that blow-off top, outside day down, signs of a potential reversal finally here, but nothing yet that's broken any key levels that would get us worried about the market. So let's take a look briefly at the economic data that's due out this week. Obviously nothing Monday due to the Memorial Day holiday. Tuesday you've got the Case-Shiller 20-City Index and Consumer Confidence. That Consumer Confidence number at 10 a.m. Eastern Time can be big to the market. Wednesday we've got MBA Mortgage Index, which is not a big deal. Thursday we've got initial and continuing jobless claims. The second look at GDP for Q1, that's not a big deal. Pending home sales, natural gas inventories, and crude oil inventories. Friday, we've got personal income and spending along with PC prices and Chicago PMI and Michigan Sentiment's final look for the month. None of these are big numbers. Probably consumer confidence is the biggest one there, maybe Chicago PMI. The second look at GDP can move the market if it's much different than expected, but they usually have a pretty good idea of what that is based on whatever's going on from the first number. So that's all we've got this week. The thing to prioritize is that Tuesday is going to be a little slow coming back from the long weekend, and Friday is going to be slow not only because it's a summer, we're heading into summer for Fridays here, but it is the last trading day of May, so you're going to get some window dressing. But that still leaves us with Wednesday and especially Thursday, where we can get some good action hopefully in the market. We'll stay focused on it. We hope to see you in the lab. Everybody have a safe and fun Memorial Day weekend.